Good morning, this is Connor from 0DTE Traders here to present our market minute for November 20th, 2024. It is 11:20 and the SPX is trading lower down 0.6% to 58.79. The market did open flat here this morning, but selling pressure right out of the open. A break of our flip level 5900, which is our risk on, risk off indicator, and subsequently a spike in the volatility, which is common behavior. The market then moved lower to the major support zone of 58.60, 58.50. And we did see a little bit of a bounce there. The market's struggling to sustain upside. But something I want to highlight here is the VIX. Now, when we're below the flip, VIX, just volatility in general, implied vol, tends to be an exacerbating factor. So when we're looking at buying those dips, we're looking for a peak in volatility, essentially indicating that vol sellers are entering the market, whether that's traders, selling puts or they're monetizing their long puts. But if we do see that vol contraction, it does invoke buy flows and can create that sort of, squeeze like bounce on the upside. And we did see that here today, peak in vol off that zone. Yesterday, same sort of thing, peak in vol off that zone. Friday, same sort of situation, peak and vol off that zone. If we hold this zone, or ideally hold 58.75, we could see that drift back up to that fair value 5900 handle. A break of that support zone opens the door to the election gap with fill. Fill's all the way down here at 57.83, so definitely out of the question here today. But the first support zone that we are watching is going to be around 58.25, a more significant support at 58.15, 5800, which is our put wall and lower bound. Taking a look at our gamma charts, just to give you a different visual, the gamma index has been more neutral than imbalanced over the past few trading sessions, as we've more or less continue to gravitate around that 5900 handle. And this is our transition zone, the flip. All strikes below negative, that is destabilizing for the market price. All strikes above positive, which is supportive for the market price. You can see the standout of 58.75, but more significant here, the standout of 58.50 and 5800, which is the put wall. On the upside, 59.25, 59.50, which also correlates with gap fill. And then above 59.50, the market should become well supported, which supports a move into 59.75, 59.80, and then the call wall at 6,000. Today, after market close, we are going to get NVIDIA earnings. And NVIDIA earnings has essentially become a market-moving event, and we see this reflected in the SPX volatility term structure, elevated here for Thursday and Friday. Now, the implications here is as follows. If NVIDIA earnings beat expectations or come in line with expectations, we should see short-term volatility crush, which will support the upside. So there is potential for an upside squeeze on Thursday and Friday. Conversely, if NVIDIA earnings disappoints, we could see that further spike in volatility. And if we break that lower bound of 58.50, most certainly going to be a bearish indication. In terms of 0DTE positioning, today the max call is at 5900. This is the strike with the highest 0DTE call volume. Max put at 58.50. This is the strike with the highest 0DTE put volume. Volume is skewed to the put side by 2%. And these levels are generally established early in the morning, and more often than not, the market gravitates to one or the other. So it is used as a logical target as well as a pivot point, and gives you an indication of the potential trading range for the day. So 5900 max call, 58.50 max put. Now, obviously, volume is dynamic, so a shift higher in these metrics is a bullish indication, whereas a shift lower is a bearish indication. If you'd like to learn 3 option strategies that our traders use to generate consistent profits with 0DTE options, along with a repeatable process on how to trade these strategies effectively, join the team at 0DTEtraders.com.